Good morning and welcome to the Noble Capital Markets Virtual Equity Conference. I am Joe Gomes, Managing Director and Senior Analyst at Noble Capital. Today, I have the pleasure of introducing V2X. Following the presentation, we'll have some time for Q&A. V2X transforms operations and sustainment for government and commercial clients worldwide through operational support services, training, and converged environments that integrate physical and digital infrastructures. With us today from the company is Sean Merle, Chief Financial Officer. With that, I'm going to turn it over to the company. The floor is yours, Sean.
Joe, thanks a lot. Appreciate the opportunity to be here and talk to everyone. I've got a couple of charts that I'll walk through and then open it up to Q&A. So let's start with the next chart, which is a little bit of a recap of our first quarter and where the company finished in Q1, as well as some of the positive trends that we've seen as of late in the market. I'll start with the increased revenue visibility. So we've had some very encouraging news from our U.S. Army customer relative to our LOGCAP contract that will extend that activity into 2029. So what that means for the company is that we have tremendous visibility with our $12 billion of backlog to go out with our top 5 programs into the 2029-2030 timeframe. So we really feel that we're taking advantage of this opportunity to invest in new businesses and new areas that we'll be pursuing. I'll talk in an upcoming chart about what some of the characteristics of those investments and the new business that we'll be pursuing. But it truly is something that, I've been in this industry for 25 plus years, haven't seen this opportunity from a recompete standpoint and the visibility in that backlog on our top programs that goes out that far. Another thing that we've seen occur here early on in 2025 is, when we think about what we do, and Joe highlighted it very well in the opening, we have a land and expand approach. And so we have a very diverse global workforce around the world in many environments, the Middle East, Indo-Pacific region, things like that. And we're now seeing traction on foreign military sales and other international opportunities where we've had a presence in various regions. And now, because of a variety of reasons, we're seeing customers come directly to us, or in some cases through the U.S. military, requesting V2X services and support, which is really a great thing for us to see. Our teams are extremely well prepared to go meet those missions and support everything that the customer needs. And then I'd be remiss if I didn't talk a little bit about the improvements in our capital structure. So we've done a number of refinancing activities to improve our liquidity. I'm very happy with where our leverage ratio is. For those that may not have seen the company previously, we started with a leverage ratio in about 2022 that was about 4 times, and we're under 3 times today. So this is a great example of the company and the business doing what it should do, one, to pay down the debt, but then also taking advantage of interest rates and refinancing at very opportunistic times. So very well positioned from a balance sheet standpoint, and looking forward to continued growth and, like I said, investment in the company. Let's go to the next chart. So I wanted to put this chart up just to demonstrate diversity in our customer base with a couple of recent things that have come to us. And the team was very successful with it. And again, I'll talk about geography and diversity. So I'll start in the upper left with Cobra Dane. V2X has been an incumbent supporting Cobra Dane radars for many years, and we were awarded some additional work, $62 million, supporting the U.S. Space Force. Now I'll go over to the far right of the chart, in the upper right-hand corner, and you see an award for a $140 million 5-year support program for the U.S. Space Force at Ascension Island. And so when I think of Cobra Dane, I think of Ascension Island, and I think of work that we have in Greenland, in Pituffik, that support the Space Force. These are critical capabilities for the United States that are very geographically dispersed, and they are critical to the mission capabilities that this country has around the globe. And here you see V2X kind of at the nexus of providing those capabilities. So extremely happy with the work that the teams have done to go successfully capture that work as well as extend those programs. And the last one I'd point to on this chart is at the bottom middle, the FBI. So V2X has a long and storied history in doing maintenance, repair, and overhaul of aircraft and a variety of different platforms. And this is a perfect example where the FBI customer sought us out to come look at their platforms and help support the various aircraft that the FBI has and the MRO capabilities that V2X has, and see if there was a way that we could work together. And the team successfully captured $100 million contract to go support the FBI in this. So again, the geography, the diversity in the portfolio, and being in the right place at the right time to support our customers' missions is critical. And we've got several examples of that here. Go to the next chart. I talked earlier about strong visibility for growth, and let me amplify and kind of double click on that a little bit. We have very limited recompetes in the next several years. So for this year, it's less than 5% of our revenue is up for recompete. So we're taking advantage of that. Like I said before, it's very unique, and we're making investments in opportunities to go capture and pursue. Here's what's different, for us. We're looking at larger scale proposals and programs, and you see we have 5 programs that we will be pursuing, each in excess of $1 billion within the next 12 months. Let me also highlight that this is reflective of bringing the combined capabilities of this company. So if we think about, I mentioned MRO capabilities, we're known for our platform modernization capabilities, our base and range support capabilities. What we're now seeing is where we've had a physical presence, we're bringing modernization capabilities to that customer. Or where we've been doing some platform modernization, our customers are now asking us to forward deploy those things to other geographies around the globe. So wonderful examples of how we're harnessing everything that the company brings together to go pursue larger scale opportunities for the company. And again, think we're extremely well positioned for those things. And then I mentioned briefly the last box on the chart here. Our top 5 programs extend to 2029 and beyond. So we are extremely happy about, again, where we sit, that visibility that we have. It's allowing us to make the investments in pursuing and capturing other things to go continue that trajectory of growth. Next chart, please. So I'll wrap up with a summation of what our value proposition is as a corporation. We're extremely well aligned with where the DoD is today, and we have very strong relationships with our customers to drive on-contract growth opportunities, meaning we're putting additional ideas in front of our customers continually. They have an insatiable appetite. Some of the things that we are responsible for is maintenance and repair of different assets. Some of those things have atrophied over time, so it's not unusual if there is a laundry list of things that our customers need done, and we're able to provide those services. And our teams do a great job of demonstrating that continually. I talked about the revenue visibility in the backlog, tremendous. I've not seen things like this in several years, like I've mentioned, in working in this industry. And then I think from a financial standpoint, the thing that is very attractive about this company is its low CapEx. So on average, we'll spend between $20 and $30 million a year in CapEx, and we have very strong cash flow. I think that's something that a government services provider like us can do extremely well, and we're on that path to demonstrate that continually with predictable cash flow performance. So that's a bit of an overview of what we've seen early on in 2025 and a little bit of the capabilities of the company. Joe, I'm happy to open it up to any questions.
Thanks, Sean. Great, insightful presentation. So let's turn to some questions. What do you mean when you say you are supporting the full life cycle of the warfighter and enabling missions from start to finish? Maybe give us a little more color on that.
Perfect. Yeah. So it's for us, it starts with training. About a year ago, not quite, we were awarded the Warfighter Training Readiness Support contract for the U.S. Army. We will be the largest provider of training for the U.S. Army. That program is in its transition phase and will be full up and operational here in the back half of 25. So it starts with that. Okay, the U.S. Army looks to V2X to do that training. When troops are deployed, we're responsible for taking care of our troops, getting them from place to place, wherever it is that they're going. So as some of us have talked, when folks get deployed, we're the last person they see as they're departing, wherever they may leave from here in the United States. And we're the first person that greets them when they land. And all of that activity to support the base, while they're in theater or wherever the base may be around the globe, is what we're responsible for. Some of the assets that folks utilize while executing a mission, we provide, we repair them, we overhaul them, and then as a result of being in that position, Joe, we're able to see how to modernize them. Okay, now we're not modernizing things with 10-year production runs, if you will, of things. We make incremental improvements on what's already there, and those things are absolutely in demand with our customers to solve an urgent need. And so we're with our customers through everything that they're executing, and I think again that positions us extremely well to understand those needs and provide those critical capabilities.
Thanks for that insight. Now, there's been a lot of news lately about increased defense budgets, and how could these increases benefit V2X if they occur?
I think one of the things we're hearing a lot is about readiness. Okay, and again, I'll go back to training. It all begins with training. We're seeing increases in recruitment numbers, which is fantastic for the U.S. military as a whole. Well, all of those service members will need to be trained in some capacity, and so I won't get into a discussion about policy in terms of what the U.S. posture might be in any geographic area or anything like that. But I think those investments that we will make in readiness and enabling success for whatever the mission is, V2X stands in a position to benefit from. It's stuff that we've been doing. We're 80 years old in terms of the capabilities that we've been providing to our customers. We might be new in that, this company came together and it's the convergence of several companies in 2022. But we have a deep-rooted history in being able to deliver this capability, and I think we're extremely well positioned.
Great. I'm gonna throw you a little curveball here. I was gonna ask you a little bit more about the log cap contract extension, the recompete risk that has been significantly reduced, but I think you did a great job of already describing that. So let me change up a little bit and ask. You mentioned on contract growth. And so the first part was going to be, maybe you could talk a little bit more about, what percent of your overall growth is on contract growth being responsible for. And the second, you talked about, a significant amount of deferred maintenance out there. I don't know if you can quantify any type of numbers there of, how big that deferred maintenance opportunity is.
Yeah, so let me start with the on contract growth. So let me give you a flavor for what that looks like and what the teams do. And there's a cyclical nature to some of it, right? So it's when there's availability of funding that if you put yourself at a base or at a location somewhere around the globe, you're a commander, you have a laundry list of things to get done. It's not just about tending to the troops that you have responsibility for, but it could be buildings, it could be HVAC, it could be construction, it could be water remediation, any of those nature of things. So you always have a laundry list of things that need to get done, and there's a prioritized set of things that depending on funding availability, will dictate whether or not you can go pursue and go execute those things. Our teams stand at the ready to go do exactly those things. Here's how that comes back to us. We'll get a modification to a contract. They might be small, Joe. They might be $28,000 for something, but they can range up to millions of dollars for things. And it depends on, again, what the appetite is from a budgetary standpoint. Here's the benefit. It turns extremely quickly. If I step back now and think about it from a financial standpoint, the period within which we execute those, some of them can be in weeks, some of them can be in a couple of quarters. So from a financial standpoint, you'll see a book and turn extremely quickly, typically, right? And that there's some nature of seasonality to it, Joe. We all know when the government fiscal year ends, there's always a surge of activity for things that either did or didn't get done. And so we tend to see that as a little bit of why we're back end loaded typically in terms of our revenue profile, if that makes sense. Deferred maintenance, there's lots of numbers floating around out there. I would tell you, I would characterize it as this, and it's in the billions. Okay, it's not, it's notable, and it's all assets that have been deployed, meaning aircraft, helicopters, weapon systems, whatever the case may be, right, need to be maintained, upgraded. Joe, I've been asked a lot about, like the threat from a business standpoint with things like UAVs or unmanned platforms. The thing for us is we think about opportunity sets, and we sit at the at kind of that critical point. All of those things, no matter what they are, need to be maintained, and in many cases, over their life, they'll be upgraded. You think about a B-52 today, Joe. Those platforms are 70 years old, and they're going to fly for another 20 or 30. We work with customers to support those missions, upgrade, maintain, and so we're kind of platform agnostic that way.
Great for that. Thank you. Now, given the geopolitical environment, especially as how it relates to places like the Ukraine, Israel, has the company seen any positive or negative impact on its business?
No, I'd say in Ukraine, we support our customers. I wouldn't say we have direct impact in Ukraine as a result of that conflict. We have absolutely provided support, to customers, but it's not a material amount. And relative to the Middle East, we are the largest service provider to the DoD in the Middle East. It's hard to pinpoint exactly what might drive additional activities, and what I mean by that, to give folks clarity, is that it's a dynamic environment. I can't say that it's related exactly to Israel and Hamas and those things, but there are requirements that get levied on our military consistently. As troops move around the planet, we move with them, irrespective of what that area of conflict may be. So as I said before, we're with our customers through the life cycle of everything, to help provide that support.
Now, the Indo-PACOM area has been a growth vehicle for the company over the past couple of years. What is driving this growth, and do you see more potential from this area?
I do. I think the growth is largely evident as you've seen the U.S. shift resources to that region. Okay, that's no secret. You've seen an influx of resources there. I think there's continued growth, and as I went through some of those charts, we're seeing those end customers come directly to us with either foreign military sales or direct commercial sales, which is extremely encouraging. So again, that land and expand, we have the presence there. We know how to operate in the region. I'll also compare and contrast a little bit. Things in Indo-PACOM are very different than things in the Middle East, meaning the conditions are extremely different. The maintenance requirements are very different as a result, right? Just the environmental factors there alone, we are extremely well positioned to do that. We know that. We're already there. I hear others talk about, going there. We're present, and we think presence matters.
So let's kind of follow on with that. You mentioned a strong increase in bid volume for 2025. Again, kind of maybe a little more color. What's driving this? What areas is the company targeting?
Yeah, I think it's core to what we already do. So I'll give you a great example. I won't name the program, but I'll say that we are where we've had a modernization and sustainment type of approach with some assets. That customer is now asking us to bring some base support to it. So it's one thing to build the capability. We have a 1 million square foot facility in Indianapolis. We're very proud of the engineering prowess and capability there, and the teams do great work. And now we're pursuing things that are talking about the deployment, the installation, and the maintenance of those things. So what I'm seeing is harnessing of the entire breadth of capabilities that the corporation has. Those are examples of the types of things that we're pursuing. And just in the last year, Joe, I can, there's 3 or 4 of those type of things, that come to mind, that when we think of the company, we're very diverse today. I mentioned that. We're proud of that diversity, but we also have enduring franchises. I mentioned the Warfighter Training Readiness Program, certainly LOGCAP. We're going to look for those things, and we're going to pursue those things that are franchise capabilities to, again, support our customers. The nice thing, if you're thinking about V2X, is that these are not new starts. These are things that people are, in many cases, already doing. And so we're able to take advantage of this, call it a recompete holiday, so to speak, and go pursue those things. Great.
Now, you mentioned a little bit about the repricing and extending of the debt structure. How is this, directly benefiting the company? Could there be more of this in the future?
Yeah, listen, we will be opportunistic, and I think the team does a wonderful job of taking advantage of those things. I'll crystallize it though exactly to your question. When I got to the company in the fall of 2023, interest expense at the time was $110 million. This year we're talking about interest expense at low $80 million type of number. So there's clearly a direct benefit in terms of an expense profile, to the company, shareholders, the changes in our adjusted EPS, all of those things, are benefiting as a result of those things. The team does a spectacular job of working those things, and we will be opportunistic. When those things present themselves, Joe.
Okay, let's double up on this next question. First, how would any changes in tariffs impact the company? And secondly, given the DOGE efforts out there, have they had any impact on the business?
Yeah, so let's start with tariffs. Modest impacts from anything we've seen, and by modest I mean 60% of our business is cost plus, meaning cost reimbursable work. So any impacts that we're seeing are largely reimbursable by our customer. But to put a fine point on it, we're looking at very, very, very small amounts. So from what we've seen so far and what's been announced, nothing material at all to either any of our customers or to the financials for the corporation. Relative to DOGE, I would say no direct impacts of DOGE, but knockdown effects. Here's what I mean by that. Unbeknownst to a lot of folks at the time, to include us, we had some contracts that had some funding streams that came from USAID. The contracts were put on hold. They've been restored, no issues today. But we did see some changes and some perturbations in, call it days or weeks, where some of those things got sorted out. Program got, restored, the funding streams ironed out. So I call those knockdown effects, Joe, as opposed to direct Doge. We don't do the government consulting work, so to speak. That type of stuff. We have very little exposure in any of the Fed civil type of customer base. So, I only highlight that as an example of secondary effects that I think folks in industry have seen. That's one example, very immaterial in terms of the company. And like I said, that was resolved in a matter of days. But that's the type of thing that we have seen.
Okay. Let's finish up with this one. The company recently announced a $100 million share repurchase program. So the first question, did the company repurchase any shares in your major shareholders' recent sale? And second, what metrics will management look at to determine whether to purchase shares?
Yeah. So we did not participate in buying any of the shares that our private equity owners recently sold. They sold 2 million shares a couple of weeks ago. We did not do that. Relative to what are we looking at, I will tell you that Jeremy Winziger and I have a daily debate on these types of things, right? So the way we think about it, very similar to interest rates. We will be opportunistic. Where there's value to be created for shareholders, we will go do those things. I think a couple of the things that are factoring into our thought process now, one, the leverage ratio where it's at. I mentioned this earlier. We're really happy that it's below 3 and has remained that, and feel confident from a cash flow generation standpoint. The investments that I talked about with new business that we're making, we feel very good about those things and our ability to go do those things, and then share repurchases. So I absolutely expect us to utilize all of those levers, at some point, and we'll take advantage and generate value for shareholders. In the end, that's what we're here to do.
Great. Well, Sean, we've come to the end of our allotted time. We've covered a lot of ground today, and we got significant insight into what V2X does, its markets and opportunities. We appreciate you taking the time to participate in our conference, and we wish you and the company the best in the future. Thanks again.
Thanks, Joe. Appreciate your support and your time.